I think if we had had less excess credit near the top of the cycle, we wouldn't have had this problem. Or if we hadn't gone in a nosedive on credit when the authorities panicked, we wouldn't have had the severe problems we had. You could have smoothed it. Now, it's all sort of counterfactuals, and it depends when you started and what you did. But I would have started well before the credit binge was at its peak. And then if you'd smoothed it then, you wouldn't have had anything like these problems. If you came in at the peak of the crisis, you could still have eased the downside if you'd made more money available for longer to ease people off their bad habits. Well, of course, returns are going to be lower over any time period for both national and international reasons. I mean, there is a huge savings glut worldwide and very low interest rates worldwide. And there's a huge surplus of capacity in many fields worldwide. And so that is going to determine lower returns. I'm trying to help the authorities manage the current crisis. Yes, of course, I'm one of many who don't want a crisis like this in the future. No sensible person wants a crisis like this in the future. But we're not in the luxury yet, I think, of just taking action to stop a future crisis. We should still be in firefighting mode on the current crisis because it's not over. It is still doing enormous damage to people's lives and jobs and livelihoods. There are still going to be job losses. There are still real problems for private sector businesses getting themselves out of this mess and this downturn. There are huge problems still to be resolved in the bad banks. And I'm saying you need to work through those very patiently and very carefully. And that above all, you need to change the macro policy framework. You need lower public spending and borrowing to give the private sector some room to breathe. And you need a very different and much more active approach towards bank management for those banks that are within the public sector. Otherwise, we're not going to have an easy way out of this. Well, I entirely agree with the Conservative position that the banking regulation powers should be put back with the Bank of England. Peter Lilly and I were the shadow economic team in 1997 when Gordon Brown broke them up and took powers away from the Bank of England, strangely calling that making the bank independent, whereas if you remember, he took away their banking regulation duties and gave that to the FSA. He took away their debt-raising duties and gave that to the Treasury. And so the Bank of England did not see all the business in money markets from that day onwards that they'd always seen traditionally. They didn't see the bank asset and liabilities on a regular basis as the regulator, day by day, and they didn't see the government's actions in the same immediacy that they did when they were running it. So they didn't have, I think, the sensitivity in the money markets they needed. So they didn't understand the excess in 2006. They didn't understand the drought in the middle of 2007, which was quite damaging. So I think you need to create a unitary banking regulator again, and I would agree with George Osborne that we need to do day-to-day banking regulation in the Bank of England as an adjunct of monetary policy, because it's really the same thing. Well, I hope they don't understand it, because if they understood it and are doing what they're doing, it would be an extremely bad thing to be doing, wouldn't it? Because I feel very passionately that what they are now doing is not going to save jobs and speed recovery, which is what we all want. I think it's going to make the problem worse, and it just leaves a bigger set of difficulties for the future government, whichever it might be, to sort out. And be in no doubt about it, whoever is the government after May is going to clearly be faced with a démarche from the Treasury officials saying, you've got to do something because this situation cannot go on like this.
John, thank you very much indeed. Okay.